Hey everyone, DayTraderRockStar here for the 10 for 1000 watch list for, of course, the week of Valentine's Day. I am going to do a multiple video watch list, and I'm going to actually change up the form this week because it's just so much going on here. We have the trade show this weekend going into Wednesday. We have a holiday on Monday, so this is going to be, of course, ready for this next week and stuff. And there's just so much other things that I want to talk about. So I'm going to make this an educational video. I'm going to make this a 10 for 1000 watch list video, and I want to make this a video of just thoughts out loud. I want to talk about we're going to start off with rig right here. And I know there's a lot of lines on here, and you see this thing up here. And what I want to say is rig, again, a stock that's traded in the markets. You're going to have a few different type of stocks. You're going to have obscure penny type of stocks that, of course, you're going to have the massive followers that want to trade that because they don't have as much money, or they feel there's a bigger reward, or whatever the reason is, there's going to be those penny pushers out there in the penny stocks. Then you're going to have the blue chip and the high, the dogs of the Dow and the blue chips and the IBMs and the Ciscos and the Intels and the Microsofts and and then you're going to have the middle stocks here that traders would know, like the rigs, the RIMS, NASDAQ stock, stocks like Knight Securities, Ameritrade, where the average investor wouldn't probably know. Like, hey, I didn't know that, Home Depot was a publicly traded company. I just buy my nails there. But, so you have to have a little knowledge and think of the whole, So these are the people, So you have rig, and this is the example I'm going into here now. I would say this is a fairly tradable good stock, and we call that a well-known stock. I'll put a label on it, a well-known stock. And a well-known stock gets followed by the market, and you start to see a patterns because other traders are seeing these patterns, and the bigger fish are seeing these patterns, and the smaller fish see the patterns and stuff like that. And patterns work out, and then maybe the microscopic people in the food chain might not see the patterns, and these are the ones that are getting gobbled up here because they have no clue where to get in and get out. But if you look back and you back test into stocks, you could see there's trends in the market. You could see there's if we went out here in September, we put this on a 60-minute chart, you would see a nice little trend here. And once we broke out of that trend, we moved up. And then we formed another trend, a channel. This is basically what we call a channel. And that channel actually meets up with an old trend line here, bounces off that old trend line, which has been established back here, fails it, comes back to another trend line, which has been established. Once it starts bouncing here, because it moved here, and we can line up two points to one line, that becomes a trend line. So then we can actually work off of that trend line. And because these lines here are already been working, once we have that breakthrough of this trend line, whenever you need, what I'm trying to get to is actually when you get 2 points, you can make a line, basically. It's just an average, everyday formula. It's the first thing you learn in math. To make a line, you have to have 2 points. You draw the line through it. The third point, it's going to be before you even get there, so you're actually planning your trade out adjusted to the third point. And once that point is taken out, you can actually see the pushback. But then the market always comes back to a previous area of support. So we had 2 points back here. So again, RIM comes back to the 2 point or a trend line, and you actually start to see a reaction off of it. And this is not from coincidence. It's because this is the way the market moves. All right. And another thing I wanted to talk about today, and again, I'm going to be off in all kinds of tangents because I just want to try to throw out a lot of information. And if some of it sticks, great. If some of it doesn't stick, fire me an email. I'll go over it in a separate video. What I'm talking about here today is the move in rig. We had back here a nice reversal day. We have left this big tail here. And look at this tail. This tail actually came down and retested the upside of this trend line. So again, another trend line. I mean, if you are able and savvy enough to be watching certain things and know what to look for, like, oh, RIM's getting a spike down. I don't know what happened on that day, but I could probably guess that was the down day in the market last Friday or something, and everything got hit and RIM reversed really nicely. But it's not a coincidence that it pulled right back to the upper trend line of a recent trend line breakout. So it became support here, and then it bounced. And then on last Friday, it actually gave another nice thing. And now this is not technically what we call a tweezer bottom, where you have the two bottoms here and a nice two candlesticks and two shadows here forming a nice reversal pattern. But it's close enough to take notice to that. And I like to call this, I like to call this a tweezer bottom, where you have two distinguished tails in the market. And this last one, last Friday, was on volume. So there was more, there was actually, more volume than previous and a nice reversal on it. So you got to think there's some buyers in the stock. It's held above the lower trend line, and it's of an interest play now. And then on top of that, we're starting to form, again, another pattern. So all these things interconnect here, and it's just an amazing scenario here. So I'd definitely be watching this. This is a very good very interested in this area here, and I put a buy target on here above 85, because a nice tweezer bottom like this is really nice. The stochastics are okay. I think we need to get above 85 to be a little bit safer in this trade. And again, the title of this little slide here is called High Probability Setups Combined with Market Sentiment. And this is another thing I wanted to talk about. Certain times you could trade a stock and you're pretty much guessing, or you're going with the trend. All right? There's two ways of trading. You could trade as a contrarian investor, or a trend investor. I mean, there's other ways of trading. You could be intraday scalper, you could be a long-term investor, or whatever. But there's really a couple ways of actually profiting in the market, and that is to be able to follow a stock, buying a stock and riding it up, or shorting a stock, riding it down, or buying and capitalizing on a reversal area. So you're either with a trend or you're looking for a reversal area. Either way, when we talk about high probability setups, each time an established area comes into play, and it has a history of that, the probability goes higher and higher. All right. So if there's a history of a trend here, all right, there's a history of a trend here, and there's a history of an upward trend line, and there's 2 points right here that have history, then it becomes more of a high probability area. Now, depending on what the market sentiment is, that's a whole different story. So you're going to start hearing this a lot more on the site. You're going to start hearing the high probability setups, and combining that with market sentiment, seeing how that formula sets up for a beautiful buying area. All right. So I just want to throw that out. I thought this was a great example of multiple times you can actually trade RIM, but it's about waiting for the trade to come to you. All right. I mean, we don't really know if the market, up here is the chop zone. We don't really know, what's going on up here. So you're going to be invested in here. You'll be hoping if you're up here that we're going to get a further move up. The most likely thing you want to do up here is just be out of the market until a trend established. And just because it overbought stochastic would probably even lead me to be more of a short here. But once this is established an area here, and actually you could actually see this trend line from a recent trend line goes back. So trend lines go connect. It's a science, and you just have to be able to read the charts, and that's what I want to bring to you. All right. So once it is an established area, this becomes a very good buying area because of the recent support here of the trend lines, because of the established pattern, because of the oversold statistics, and many other reasons, due to market sentiment. All right. So this was an excellent example of a high probability setup with combined market sentiment. And here again, it's starting to form a nice wedge pattern. I'd watch that, watch that level. And again, that high that the 85 level. 85 will be something I'll put that up on the thing here. So a little thing about high probability setups. I'll do one more stock on that, and then I'll work on some other stocks here. I have a lot of stocks on the 10 for 1,000 watch list, and I have a lot of time to talk. Tomorrow I'm going to be at the trade show, and I hope people are going to be there. We'll get there. If you're, we have a nice booth. Come on by. I brought a lot of T-shirts down. I'd like to give those to the members and stuff. I hope I have your size. If I don't, well, just ask me. I'll get one to you somehow. Pretty cool T-shirts. All right. And that's, again, if you're not familiar with the trade show, just go to traderexpo.com or something like that. You'll figure it out. All right. Another thing I want to look at here All right, let's see what happens. I'm just going to go into some different things here. JCI, Johnson Control. Nice little pullback. We're starting to form a nice little channel here. And I'd actually just pay attention to this channel wedge pattern. Again, there's a lot of nice patterns starting here. This one's very bullish because we're holding way off the 200 period moving average here. And in this market conditions, I like this a lot. Johnson Control is a good company. Stochastic's got a little crossover. I'd actually pay attention, and also it's the third time we're really testing it. Well, we lost the 20 here, but it's the second time we're testing the 20. I have a feeling we'll move up to the channel line here. And if we break through the channel line, yeah, we got a buy trigger. If we don't, we should follow into this pattern, but I would buy it on the lower part of this pattern once it starts getting established again. And this is looking further out. So Johnson Controls, a stock that has potential at this point. It's holding way up to 200 period moving average. It's a great investment stock if you're planning to hold it for, I would say, 3 weeks or more. I think you definitely got a winner here. But, short term, yeah, I think we have a little upside, maybe even a breakout here. And a little downside to 626.80. Let me go into one stock, and then we'll get into the real deal here. Let's see what happens we got here. Family Dollar. I have a line in here, and I didn't even go back and look at this stock here. But it's FDO, Family Dollar Stores. And, yeah, I just noticed I have some old charts here. What's good about using the IQ charts is I have my old lines in here, and I can tell you what I traded off of and the gaps up, and I got some nice trades off here. FDO pushing right up against a major bottoming pattern here. It's not not a picture perfect inverted head and shoulders pattern, but we have the base here, the bottom, and we have a right shoulder and we have a left shoulder. But the more important, we have a good established neckline here that we could probably tag. I just put a general line here, but if you want to look for that breakout and that clean breakout, you're looking at a little above 32.15, and this is on FDO. And again, a nice pattern like this and a nice established trend line. Right now, I'm actually even paying more close attention to the tight consolidation here and the recent high here. So again, this recent high, 31.86, we'll call it 31.90, even $32. We're going to call it 31.90. That's a short-term buy trigger just on that, based on consolidation there. A true breakout would again be the further push here above 32.15. And again, nice. And that reminds me of another stock actually, Sienna here, which was on last week's watch list, and had a nice breakout out of a pure, nice inverted head and shoulders. All right, and just like this, and we got. I'm just using this area right here, and you could actually see the momentum that's picked up here, the nice crossover, the momentum. I wouldn't overstay my welcome, but I still think we have one more further push here, and I'll talk about that a little bit later. I think we have a further push. But Sienna looks great, and it's just a good example, so I wanted to bring that up to you. All right, I want to stop this video, and then we're going to go into more stocks. I want to just throw this out here for you because I might put it everywhere. And that's it. Watch for the next video in a couple minutes.